Assalamualaikum and good morning, everyone. As I mentioned last Tuesday, so for today, I will revisit topic number 2. Okay, I shared with you the videos, but before we proceed with the exercise, maybe I share with you for a while my slide and also to revisit key points that quite important when we talk about financial statement and also the financial ratio analysis. Okay. Okay. The key points here, number one, when we do financial ratio analysis, there are two important statements or two important documents as our reference. We have the balance sheet and also the income statement, right? Again, this is a recap. So hopefully you've watched the video I shared with you. Okay. Again, for those yang nampak just one video, perhaps you can go to the playlist from the video tu, dia ada playlist for PFM3023 in the YouTube tu. From there you can see all the videos actually. Okay, so for topic number 2, okay, there are two parts lah. The first part is the statement, so we have two statements here, the balance sheet and income statement, and then we have the ratio analysis, right? So for the balance sheet, okay, the most important part is the items under the balance sheets. We have in general, we have assets on one side. Okay, and it will be balanced by the other two items. Okay, two categories of items. We have liabilities and we have equity. Okay, so the details you will see the notes are there in the videos also. I've explained quite detailed what are the items under assets, liability and equity. Okay, so this is the general or the information that we're going to see in the balance sheet, which sometimes also known as the statement of financial position. Okay, for balance sheet, it is also known as statement of financial position. That's number one. For income statement, this is a statement that we will see whether the company makes profit or not for the year. Okay, so therefore under income statement, in general equation would be income. Okay, all the incomes will be recorded minus the expenses. Okay, and we're going to see whether the company makes profit or maybe loss. Okay, so if their income is more than expenses for the year, obviously they were going to receive a profit. But if the other way around, meaning their income is less than expenses for the year, meaning the company will suffer losses for the year. Okay, so that's income statement. So these two statements or these two documents are really important for our ratios because this will be our sources of information. Okay, all the ratios rely on these two documents because you will see later on in terms of financial ratios. Okay, again, for those yang dah tengok video tu, you're going to see there are 5 different categories of ratios. Okay, 5 different categories. The first one is known as liquidity ratio. Okay, liquidity ratio. They have activity ratio. Ratios. And nak kata keluar order yeah, they have leverage ratio. Leverage ratio. Before they have profitability ratio. Last, number 5, they have market ratio. Okay, so liquidity is a measurement to see whether the company is liquid enough. Okay, what does it mean by liquid? Liquid here refers to how easy they can convert their assets into cash. Okay, whether they have enough liquidity, meaning they have enough cash or cash equivalent to sustain or to pay their short-term obligations. So liquidity here just simply to see that whether they have enough liquid assets to pay all the short-term obligations ataupun short-term loans. Dalam bahasa mudah adalah short-term obligation means they have liabilities that they need to pay within 1 year, and they have enough cash or cash equivalent to pay that. So liquidity ni dia kena maintain at certain percentage lah. Alright, so they have to maintain at certain percentage. Again, I show you some example. Okay, that's liquidity. Just to see how liquid the company in order to serve its short-term obligations. For number 2 activity, this is just to see their efficiency or their effectiveness in terms of managing their assets. Okay, so activity ratio ni mostly nak tengok the effectiveness lah. That's why sometimes selain daripada activity, they also known as effectiveness ratios ataupun efficiency ratios. Okay, so basically how they utilize their assets in order to generate sales usually. So that's why in under activity they have a lot of what we call ratios that relates with certain types of assets towards generating sales. Leverage is all about debt, hutang. Okay, ratio number 3, leverage. It is about debts, how they manage their debts. So for this ratio, usually we want to manage at a lower level of ratios because leverage indicates leverage is also known as debt, hutang. Debts. Okay. So ratio number 4, number 4, the category is profitability. So the name's profitability refers to how good the company generate their profits. Okay, how good their activity lah to generate profits. And finally, ratio number 5 is about market ratios. So market ratios ni will measure the company's performance with regards to the market activity. Market here refers to the stock market. Okay, to the stock market. So for number 5 ni, I put a star here because it represents ataupun this ratio number 5 is only applicable to companies who trade in stock market. So meaning in Malaysian context, for ratio number 5, this is only applicable for those who are considered as berhad company. Okay, company yang tengok in the market, kalau ada nama dia berhad kan. So these berhad companies are the one who trades their stocks in the stock market. So in our case, stock market is in Bursa Malaysia. Okay, they trade in Bursa Malaysia. This is our stock market, Bursa Malaysia. So we only can measure market ratio if they trade in Bursa Malaysia, or else we cannot measure their ratio in terms of the market ratio. So therefore, we can only measure from number 1 until number 4 only. Okay, so that's why for your assignment later, okay, for your assignment, like I said, this would be your main topic for your assignment because you need to do these ratios. Okay, and you need to calculate the market ratios as well. So that's why for your group assignment later, you need to find companies who are considered as berhad companies. Okay, there's a lot of companies listed under berhad. So how to know which are considered berhad or not? So let me share maybe. Yeah. Okay. Right. So if you go to Bursa Malaysia website, I go to the main page. This is the main page of Bursa Malaysia. So you just type bursamalaysia.com. So this is the front page. Okay. So here you can see already the list of stocks. Okay, the list of stocks. But if you want to see in detail, if you want to search, okay, go to market information and go for equity prices. Okay, so here you can sort and find the stocks. So there's a lot of market and sector market. We go for main asalnya, we go for main market. And there's a lot of sectors that you can search from. Okay, so you can go for construction, consumer products, okay, financial services, healthcare, a lot of categories here. So let's say we go to companies yang you familiar with, consumer products. Okay, sebab semua akan beli barang kan, consumer products. And let's say the subsectors, you go for F&B contohnya. Food and beverages. So there are a lot of companies yang fall under this category. Okay, consumer product ataupun specifically relates with food and beverages. So a lot of companies, Genies, I think Ajinomoto, we have Apollo, Brahim's, then we have Dutch Lady, okay, FNN, okay, a lot of companies lah. So ada 38 entries. So this is how you want to find companies who are trade in Bursa Malaysia, and obviously their companies are considered listed companies. So for example, if I click Brahim, so their names is, the full name is Brahim's Holdings Berhad. Okay, and you can get all the information here. Okay, you can go to the company's website and you can go to see their company profile. So this is for later on. So if you want to do your group assignment and you want to search the companies, okay, usually in your class, okay, you cannot choose the same sector, okay, because you need to choose multiple companies later. Yeah, so you all will have different sector or even different subsector. Because kalau sector ni quite broad lagi, you can do based on subsector. So there will be no similar groups with the similar companies. Okay, you will have different companies and different subsector. Okay, right. So that's for market ratio number 5. So you can see all the information. I will not go through in detail because you can see the videos, but ada like another half hour or so, 40 minutes. Okay. I just want to highlight the format maybe. This is the format if you see in tests or assignment selalunya lah kalau ada. Right, but when you open up the actual reports, they will not be like this. Okay, they are more should be like this. Okay, the format statement of financial position, and like I said, this is the alternative name, and most of companies nowadays using this name, statement of financial position, instead of the balance sheets. Okay, so don't get confused when you open up annual reports and you cannot see the balance sheet because now their names are called as statements of financial position. Okay, still they have assets as number 1, they have liabilities, number 2, they have the equity. Okay, and if you recall the formula just now, assets, okay, this value, imagine this is group 2010, yeah, asset equals to 2 plus 3. So this 8.862 plus 2 million equals to 10. These two values must be equal. Okay, but you don't have to worry how to make these statements equal because this is not accounting. If you learn accounting, you need to prepare this statement. Okay, in our case, we don't prepare this statement. Instead, we just analyze it. We analyze the statement. So that's why we use the financial ratios. The financial statements are just the reference. Okay. So this is how the statement of financial position looks like. Okay, so what's the difference between group and bank? Okay, because this is company, here is bank, so they letak sini bank. Sometimes if they are not bank, they will put group and company aside. Okay, so when we talk about financial ratios, when you want to do the analysis part, always use the group data. Okay, we're gonna use data from groups section. Okay, because there's a lot more information on the group as compared to the company. Okay, remember when you want to do the financial ratio analysis later on for your group assignment, use the group data. Okay, you have 2 years, for example, here. Okay, 2010 and 2009. So comparatively, going to use the group information instead of the bank or the company. Okay, remember we use the group information. Similarly, for the income statement, for the income statement, as I said tadi, gonna see the income, the revenues, gonna deduct all the expenses incurred to see whether they receive profit or losses. Okay, so this is the income statement. They still use the word income statements. And when we want to do financial ratio analysis, the year between the balance sheet and income statement must be the same year. Okay, again, for this example, I use 2010 and 2009. Okay, so this starts with the income from the revenues, the income from other sources, okay, and then they get the total gross income, then all the expenses, right? And then this company, they pay zakat as well. Obviously, they have to pay tax. And for this company, they suffer losses, okay, net loss. For the first 2 years, 2010 and 2009. You know, on top of that, they also provide you, after the net profit or the net loss, is the dividend side. Okay, the dividend. Dalam case ni, there's no dividend because they are loss. Okay, for some companies, maybe dia akan letak situ lah, dividend per share dia berapa. Okay, so the ones at the bottom ni, usually we're going to use for the market ratio. Okay, we're going to use this for market ratio. Anyway, this is how you're going to see the income statement. Okay, this is just some example. Okay, so once you familiarize with the statement of financial position and also the income statements, now we can do the ratio analysis. Okay, as I mentioned tadi, we have 5 categories kat sini. Liquidity, leverage, activity, profitability, market or equity ratios. Okay, I will not go into detail each and every section because, for example, for liquidity, we have 3 ratios. Okay, we have 3 ratios. Right, we have the first one, current ratio. Okay, current ratio, quick ratio, and also net working capital. Then for leverage, we have 3 ratios as well. Okay, leverage, we have 3 ratios. Debt ratio, debt to equity ratios. Okay. Then we have activity ratios. Oh no, I think we have about 5 ratios here. Okay, 5 or 6 kat sini. Market ratio, also we have 5 or 6 ratios here. So we have plenty, 10, 15, 18, about 20 something ratios altogether. And as a recap, okay, so like this, we have 3 kan. For every ratios, okay, bila you tengok the notes ni, and also the videos later on, there are 2 parts. Okay, there are 2 parts explanation. First, obviously, is what is the ratio is all about. And the most important part is the ratio itself, how to calculate. This is how the formula. Okay, and next, for every ratios at the bottom here, this is the explanation, how to explain the ratio. Okay, how to explain the ratio. Okay, this is some suggestion. So for example, whatever calculation you get from this ratio, okay, the answer will be in times. This is X ni times. Berapa kali, how many times? Okay, so the higher the ratio, it reflects the ability to pay short-term obligations on time. So meaning here, the higher the ratio, the better for the company to pay short-term obligations. Okay, dia mampu nak bayar short-term obligation, because when we talk about obligations, we have two types, short-term and long-term. So short-term here refers to obligation that they need to pay within 12 months. Okay, short-term here, anything 12 months and below. So kalau long-term, anything more than 12 months, 13 months and above. Okay, that's long-term obligations. But for current, nama pun current, for current ratio, this is to indicate ataupun to measure their ability to pay short-term obligations on time. Okay, so for every ratios, you're going to see this. Okay, how to calculate, number one. And also how to explain the ratio. How to explain. And you're going to see for all, so all ratios have the formula, have the explanation. So for all types of ratios. Okay, for leverage pun sama, that ratio, debt to equity times interest and okay, so again, please review the videos. And for today, for the next half an hour, let me share with you how to actually calculate the ratios. Okay, I think I shared this exercise in my guru as well. Okay, so this is the format in exam. If you have an exam and they have ratio questions, okay, they will not provide you with the complete format of balance sheet or income statement. Okay, because we have very limited space to use. Therefore, we use this T account. Remember tadi? Bear with me, This one. This would be the format you see in the real companies. Okay, but for exam, usually we're going to use this T account type. Okay, like T and bentuk dia kan, T account. Assets on the left, liabilities and equities together with common equity on the right. Liability and equity lah on the right hand side. Okay, kalau in real life, assets on top, okay, liabilities and equity at the bottom. Okay, so but still they will differentiate ataupun segregate between assets on one side, liabilities and equity on the other side, because that's the main equation for the balance sheet. Okay, this will be our equation. So asset and they cannot asset and liabilities combine and left equity on the other side. No, they will still segregate according to this equation, either left and right or top or bottom, doesn't matter. Okay, but for exam purposes, usually you're going to use this format. Okay, left and right format. The T account, so-called T. So ni tak nampak T ni kan because I don't put one line here, but basically this is a T account. Okay, and they use the word statement of financial position. And note both statement of financial position and also the income statement has the same period, which is 31st December 2017. Okay, this is the key point here. We use the same year's information. Okay, so on the left hand side here, okay, for the exam purposes, obviously they will not label it. Okay, remember under assets study, they have subcategories. Okay, they have subcategories. They have current assets and also the non-current asset ataupun the fixed assets. For equity, also the same. Sorry, for liability, they have current liabilities and they have long-term liabilities ataupun non-current liabilities. Then they have equities. Okay, so for the exam type of questions, for this question specifically, there's no label. Dia tak letak tu current or fixed assets, even liabilities. So for this types of information, you need to label them ataupun you need to identify them. Okay, because it is really important when we want to calculate. So for example, again, if you tak familiar lagi with the categories, please revisit my videos for topic number 2 and number 3. I will share again nanti. Go to my playlist. Okay, playlist PFM3023. Look for topic number 2. There are 2 parts. For topic number 2 ada 2 parts. But it's too long sometimes. Masa last semester tu I cerita agak panjang, so you have 2 parts of topic number 2. So from there you can see the explanation of the categories of the items under the balance sheet. But anyway, I simplify je kat sini. So we have cash, marketable, securities, account receivable, and inventory. So these 3 items, this is our current asset. CA, I letak situ CA, current asset. And the net plants and equipment, this part is fixed asset. Okay, FA ni is fixed asset. Okay, on the right, the right hand side here, we have account payable, accrued expenses, notes payable, and others current liability. So these 4 items, this is my current liabilities, CL. Okay, current liabilities. So long-term debt is the only long-term liabilities, LTL. And the final 2 items, common shares and retaining, this is my equity. Okay, these are my equity. Okay, so under balance sheet, we have 5 different categories. Okay, again, for a recap, dalam notes ni ada tulis. You can see the balance sheet, we have the current assets. So ada items here. The non-current ataupun fixed assets. Liabilities pun ada current and long-term liabilities. Lastly, equity. So we have 5 different categories. Even though we have 3 items, we have the subcategories. So in total, you can split ataupun you can label 5 different sections under balance sheet. Current asset, fixed assets, current liabilities, long-term liabilities, and also equity. Okay, 5 different categories. Okay, this is the only part that you need to label, because the rest for income statement ataupun statement of financial performance, this is the other name for income statement. This is income statement. Okay, our statement of financial position, we don't have to label because we're going to use each and every single item if necessary. Okay, this is again exam, so therefore on top of you need to calculate the relevant ratios. Soalan pertama dia, calculate the relevant financial ratios. When they say relevant, meaning you don't have to calculate all ratios. Okay, as I said, we have 5 different categories and each category have more than 1. So in total, I said tadi, we have about 20 something ratios. Okay, so you don't have to calculate all the ratios, all 20 something ratios. Okay, only the relevant. So which one are relevant? So for this question, they specify to you is 8 ratios. Okay, and these are not the answers, obviously. This is not the answers. This is just as a reference. Okay, for you guys, you need to use these 2 statements, the balance sheet and income statement, calculate the relevant ratios. So what are the relevant ratios? We have current ratio, quick average collection period, ACP, inventory turnover, operating profit margin, ROE, debt ratio times interest rate. So I'm going to use this whiteboard to illustrate how actually we use the information from the statement here. So bear with me. I'm going to use 2 screens in left as my source and right will be my answers. Okay, so as I said, untuk soalan ni, they ask us to calculate the relevant ratios. Okay, so we got just going to focus on these 8, right? And as I said juga earlier, when we do financial ratio analysis, there are 2 parts. Number 1 is the calculation, and remember, every ratio at the bottom they have the indicative ataupun the suggestion to explain the ratio. So that's why for B here, question B, they ask you to analyze the performance, okay, based on the 5 categories. Sorry, in this case it's 4. Liquidity, activity, profitability, and leverage. Because this question doesn't provide us with market information. Remember, only Berhad companies have market information. So for this question, they assume they don't have market information. So therefore, we cannot calculate market ratios. So only 4 categories. I repeat, liquidity, activity, profitability, and leverage. Okay. In our case, you don't have to worry about the categories. You just calculate all 8 ratios. Okay, and you comment individually. Okay, you comment individually in terms of explaining their performance. Okay, so we are set now. We have the documents, we have the information, 2 statements. We know which ratios we need to calculate, these 8 ratios. And the output that we need to produce is the relevant ratios, the ratio itself. And we have to compare when we talk about analysis. When we do analysis, we need to compare against something. Okay. One of the things that we can compare against is the industry average. For this question, they give you this industry average. Okay. But for your assignment later, okay, for your assignment, you will not see this industry average. You cannot see. So how you want to compare, how you want to analyze. Okay, so that's why it's a group assignment. Okay, even though it's a group assignment, let's say you have 4 assets. So most likely you're gonna choose 4 different companies. Okay, so meaning every member needs to choose one company from the same industry. Remember tadi I showed you in Bursa Malaysia, choose the sector and you can choose the sub-sector. For example, I gave tadi consumer products and then you go for F&B. So let's say one company choose that. Okay, F&B. Okay, so all 4 of you, you need to choose one company from the same subsector. So F&B contohnya tadi. So adalah company yang ambil tadi Hapseng, Hap Huatai, and then Penen, contohnya Dutch Lady, yang listed within the same subsector. Okay, must be from the relevant subsector ataupun from the same subsector. You cannot choose one from F&B, another one from hotel, another one from oil and gas. You cannot compare that way. You can compare when we do the financial analysis, companies from the same industry only. Cannot compare from different industry because it's not comparative different because the way of business, the nature of business is different. So it's not fair if you want to compare. So that's why the terms they use, you have to compare apple to apple again. So need to compare companies within the same industry. Okay, that's why in our case here, they give you industry average. Okay, still within the same industry, but they use the average. Okay, so for exam, you don't have to worry about the comparative because they give you, these are the results if you want to compare. Tapi for your assignment, you will not see industry average ratios, but you need to compare between 4. You have 4 and 4 members, so everyone have different companies. So you need to compare between all 4 performances. So that's how your analysis later for 4 companies. Anyway, let's look at the first one. Semerah, okay, hope you can see. We have number 1 is the current ratio. Okay, again, if you tak familiar ataupun you cannot recall the formula or the name itself pun, please go back to the notes in the financial ratio side here ataupun please revisit the videos lah like I said tadi. I will share again kejap lagi the videos for my playlist where you can access all the videos including this topic number 2 juga. Cuma we don't have enough space dekat kan not enough space. Cuma yelah every week dia boleh letak one video je kat one link. Tapi from the link you can access more. You go to my channel yang go to playlist PFM3023 tu, you can access for all videos. Anyway, as I said, just go to the notes or to the videos to revisit the formula itself. Tapi untuk exercise ni, I assume semua dah tahu lah. So for current ratio, the formula is current assets divided by current liabilities. Okay, for the first one I tunjuk the difference ataupun the formula kat sini, current assets divided by current liabilities. Okay, for the rest I takkan revisit balik lah. I just go straight. So that's the importance of labeling. Okay, labeling our information here. Give me 1 second, I ambil calculator jap. So you need calculators. Okay. Okay. So as I said, our current assets consist of 4 different items from cash until inventories. So what you need to do, you need to total up all the information. So 30,000 plus 600,000 plus 830,000 plus 400,000. Okay, so you have about 1.86 million. Okay, 1.86 Okay, betul. So 1.86 million is the values of current assets. Okay, so how I get this information? I add all four, 30,000 plus 600,000 plus 830,000 plus 400,000. So all four under current assets, the total would be 1.86 million. Okay, 1.86 million. And our current liabilities consist of 4 items as well. So again, you have to total up 460 plus 150 plus 270 plus 200,000. Have 1.08 million. Okay, 1.08 million for current liabilities. So you have these two information already. So what you need to do next, simply divide according to the ratio. So 1.86. 0.86. Right? So you have the ratio of 1.72 times. Okay, remember, every ratio indicates the answer in what? Either in times, in percentage. Okay, so every ratio they will indicate at the bottom here. So in our case, current ratio, the answer is in times. Okay, in times. So it's 1.72 times. Okay, so one of the key criteria when we do financial ratio analysis, the ratio itself standalone sometimes is not really meaningful. Okay, we know it's 1.72 times, but is it good? Is it bad? Okay, some ratios we can indicate, okay, this is quite okay, but some ratios we cannot say it is good or bad unless we compare. Okay, so we need to compare. So that's why, again, I recap, for your group assignments, you need to compare for all 4 companies, their current ratios, for example. That's number 1. Or in our case here, we're going to compare this ratio against the industry average. As you can see here, the industry average is 2.0 times, ataupun 2 times. So for current ratio, the higher the ratio, the better the performance. So in our case here, the company, which is the Sunrise Corporation, has less, 1.72 against 2.0. So obviously 2.0 is better. Okay, so this company has less ability. So if you want to comment, okay, I just show you one example how to comment. Okay, I put it here for you to refer how we can comment. Okay, so first, after we do our calculations, right, you can refer to this explanation untuk you comment ataupun analyze the performance. We know, again, I recap, this is Sunrise Corporation, the company here is Sunrise Corporation. Okay, so we do analysis on Sunrise Corporation. So therefore, we're going to say Sunrise Corporation Okay. Has. Okay. So this is the comparative word that I'm going to use. Okay. Usually in terms of comparative words, I'm going to use either better or worse. Okay, this is comparative word that I can use. Okay, better or worse. So if the ratio indicates they have better ratio, I'm going to use the word better kat dalam ni lah. But in our case here, if you recall, 1.72 is not better than 2.0 kan? It's worse, not better. So therefore, I'm going to use Sunrise Corporation has worse ability, okay, to pay its short-term obligations on time, okay, as compared to industry average. Okay, to the industry average. Okay, so we have the target company, Sunrise Corporation, and their comparative, which is industry average. Okay, so worse than underline. So it can be better juga lah. It can be better. So kalau dia punya score is more than 2, for example, remember tadi, the current ratio is 2.0 kan. Let's say lah, the current ratio for industry is 1.5, katakan, 1.5. So obviously, Sunrise Corporation has better ability because they have 1.72 as compared to 1.5. So therefore, your explanation would be Sunrise Corporation has better ability to pay short-term obligations on time as compared to the industry average. Okay, so that's how you play with the explanation. Okay, so yang I underline ni, you need to change according to the performance itself. Okay, but in our case here, yes, it is worse because the ratio is lesser than 2.0. Okay, so every ratio you need to do this. Okay, show calculation, comment ataupun analyze. Okay, for every single ratios. Okay, ada soalan ke? Or I show you the second one. If there's no question, okay, let's move on to second ratio. Second ratio is known as quick ratio ni. Quick ratio. So quick ratio also known as acid test ratio. Okay, the other name there is acid test ratio. So it's quite similar like current asset, current liability punya ratio ni. But the current ratio, for quick ratio, we take current assets, the total current assets, okay, the same information, but we need to minus inventory. Okay, we have to deduct inventory in our in our ratio for current assets, and we're going to divide this with current liabilities. Okay, so most of the information is already there. Okay, for current assets is 1.86 million tadi. Okay, but we need to deduct the inventory. So our inventory is 400,000. Okay, so we have to minus inventory, and our current liabilities are the same, 1.08 million. Okay, same rule, same technique, 1.8. So our ratio is 1.35 times. You just keep the 2 decimal. It's similar like the question. Sometimes ada yang guna 1. But just keep 2 decimals for easier reference on easier comparative. Okay, so the ratio is 1.35. Again, the same process after you do the calculations. You need to comment. Okay, so in this case, again, still, if you compare Sunrise Corporation's good ratio against the industry average, the Sunrise Corporation has worse ability. Always comment on the target company. Sebab you calculate Sunrise kan. So therefore, you comment on Sunrise performance. So you're gonna repeat the same process. Okay. Again, and check the quick ratio. It's more or less the same as quick as from the current, except you have one more words atau few words you kena tambah. It's still ability to pay short-term obligations, but you add without rely on inventories. Okay, we deduct inventories kat sini kan, so we don't rely on inventory. Why we deduct the inventory? For quick ratio, which is also known as asset test tadi asset, they want to see how strong ataupun how robust the company in terms of serving their short-term obligations without relying the least liquid. Okay, least liquid. Yang paling tak liquid sekali current asset is inventories. So therefore, to test even further, okay, the performance of the company, they now reduce ataupun they remove inventory. So how their performance now? Sebenarnya for quick ataupun current ratio ni, the ratio must be more than 1. Okay, must be more than 1 because if there's less than 1 current ataupun quick ratio, this indicates that they are not liquid enough because they are sebab liabilities hutang kan. They have less assets to cover their debts, short-term debts. So that's why they must be liquid. And to be liquid, they must be more than 1. Okay, so technically, if you see the performance, both companies are, ataupun the performance of the companies is liquid enough. Both are more than 1, kan? But comparatively, compare against the industry players, they are left behind a bit in terms of liquidity. Okay, in terms of liquidity, they are left behind. Okay, so that's how you comment. You can comment. Sunrise Corporation has, again, worse ability to pay short-term obligations on time without relying on inventories as compared to the industry average. So that's how you write the comment. Okay, moving on sebab tak sempat ni I have about 5 minutes ni. Number 3 is the average collection period, ACP. Yeah, ACP 40 days is the industry average. Okay, so how to calculate? Based on ACP, the formula is account receivable divided by sales times 360. So why I use 360? Soalan pun suruh guna use 360 day for calculation. So usually for our ratios, in fact most of our year in finance, we use 360. So we don't use 365, we use 360. So therefore, how to get this account receivable? Okay, this is not category, this is very specific. So go look into your balance sheet and find account receivable. So account receivable there, 830,000. Okay, 830,000 account receivable is in current assets. And the sales is from income statement. Okay, sales income statement 7 million. Okay, 7 million. And you multiply with 360. So here you have 42.7, it's about 43 days lah. I just found out 3 days. So it is in days, right? So I just round up 42.7 into 43 days. So basically what does it mean? The company needs 40 days on average to recover the debts. Sebab account receivable ni adalah hutang. Meaning people owe the company's money. Not dia yang owe company, different people dia yang memberi hutang. They will give debts ataupun credit to their customers. So in this case, on average, the company needs 43 days to recover their debts. Okay, obviously when we talk about debts, the faster you recover, the better the performance kan. So to see whether it's good or not, 43 days, compare against the competitor ataupun the industry average. So on average, the industry just need 40 days to recover. So what does it mean? Sunrise Corporation, again, has worse performance in terms of collection. Okay, so nanti komen lah. Again, I recap. Go to the relevant ratios. In this case, is ACP kan. So, so you can use this. The high ratio is for this company. So the company has worse ACP ratios, which indicate that the company may have slight problem in collecting debt as compared to the industry average. Ataupun you can rearrange the words, ataupun you can revisit the words based on the explanation tadi lah. The company has worse performance as compared to the industry average, which indicates that they requires longer time to collect debts as compared to the industry average. Okay, so basically that's the general idea how we calculate the ratios. Okay, maybe one last information kat sini, one final ratio yang sempat nak tunjuk kat sini. Number 4 is inventory turnover. Okay, so untuk inventory turnover, the formula is cost of goods sold divided by inventory. Okay, where I can get this cost of goods sold kat sini. Under the sales, we have cost of goods sold, 2.6 million. And inventory in the current asset tadi, 400,000. So it's 6.5 times. Okay, 6.5 times as compared to the inventory turnover for the industry average is 8.4. Again, when we talk about turnover, the higher the ratio, the better. Right, so once more, the company, which is the Sunrise Corporation, has worse ability ataupun less ability as compared to the industry average. So 6.5 against 8.4, obviously, their performance is worse as compared to the industry average. Okay, so again, go to the comment kat bawah ni. Over kat mana? Okay, it shows they have worse effectiveness of using inventory to generate sales. Sebab cost of goods sold ni, we use to inventory turnover, we use cost of goods sold. Okay, when they use or kat sini, okay, it means priority, we use cost of goods sold. If there's no cost of goods sold in the account ataupun in the statement, then you can refer to revenue. This is second choice. Okay, our first choice always cost of goods sold. Okay, again nanti you akan notice dalam this category, they have a lot of turnovers. Tengok inventory turnover, fixed asset turnover, total asset turnover. Inventory turnover, this is the only ratio that we use cost of goods sold. Untuk yang lain ni, we use sales. This turnover also we use sales. Okay, and even account receivable ni pun we use sales. Only inventory we use cost of goods sold. Okay, because when we want to measure inventory, this is very relevant if we use cost of goods sold instead of sales. Sebab untuk sales and cost of goods sold, the items ataupun the quantity is the same. The only difference would be the price. In sales, they guna selling price. For cost of goods sold, they use the cost value. Okay, so untuk inventory, we use cost of goods sold. Tapi yang lain, ni tengok, semua guna sales. Sales. Okay. So I think that's about it for today. Alright, so I recap balik for topic number 2 and focus on what are the important parts, how to calculate, how to analyze. Every ratios have the analysis, as I said. You need to do the comparative. And I'm not sure whether in my guru the coordinator dah upload ataupun belum, I'm not sure the instruction ataupun the question. Right. Ada soalan tak? Any questions?
understand.
Okay, good. So again, kalau tak really understand fully, for example, just go back to the video and you can reach out to me. Kalau you need anything, just let me know. You have my numbers before, you can text me. Just to let you know, officially sepatutnya I will be on study leave from 1st of November. 1st November tu next Monday kan. Sepatutnya. I'm not sure whether your new lecturer is in or not yet. Okay, but I supposed to travel on the 1st tapi ada delay because of the documentations and whatnot. So my travel will be delayed as well. So therefore I'll be around lagi. So kalau the new lecturer tak ada, I will still be here next week lah. So insyaAllah if everything nanti I clarify with the head of department or else I will be here nanti lah next week to continue with the next topic. Okay, so thank you very much for your attention. So I'll see you guys inshallah next week. Right, thank you.
Thank you, Doctor.
Okay, welcome. So I will share this video dalam my group. I will share this one. So if you want to see the full video untuk topic 2 and 3, go to my YouTube playlist tu. Alright, thanks.
Thank you, Doctor.
Okay,
Thank you,
welcome.
Doctor.
Right.